Hey, what's up, everybody? So, another goal that I had set for myself for this particular year was making sure that I had my dividend portfolio in place. I had another portfolio that I was working on for growth, and then for the next 10 years, I decided I wanted to make sure that I had a dividend portfolio in place, especially as looking to retire within the next, say, the next 10 to 15 years. It's really important. The one thing that I really liked about M1 Finance was that you can purchase micro shares, which was something that I found to be very attractive. Of course, it is free to open an account with M1 Finance. All you need is a copy of your license and either some sort of a utility bill for two forms of identification, and then you can go ahead and start by opening up a portfolio, which you can make however you like. You'll have these different little pieces, pies as they refer to them. So you'll have your whole portfolio, and then each pie will represent specific aspects. For my particular portfolio, I wanted it predominantly, of course, dividends for the dividend growth, as well as safety. Bonds, I put 20% due to my age. I am 40, so I wanted to make sure that I had an adequate amount in bonds for safety. And then I did want to allocate about 15% of my portfolio to risk. So for my particular portfolio, I started this one back at the end of November with $200 just to give it a try, and then I've actually enjoyed the way that the actual application works. And so I do recommend it. I am about 4.5%, which is only about $20. I mean, you can see it's $2.28 in dividends so far, and of course, $18 in terms of market gain. And of course, it's not realized because I haven't sold. And so this portfolio, I'm actually adding about 1,000 a month to this portfolio going forward, and I'm trying to hit the 12K mark for this portfolio for the end of the year, and hopefully between the growth, we'll see maybe I'm trying to because I do allocate according to how I see what's going on, of course, with the different stocks that are within this portfolio. I do have about 20 stocks in the entire portfolio. Of course, for the bonds, it's just the Vanguard Total Bond Fund, BND, and like I said before, that's about 20% of my portfolio is allocated just for bonds, and that's literally just for safety. In terms of the risk, some of the stocks that I did like, of course, was a little bit of tech, of course, with Apple and Microsoft. Squarespace is an excellent stock. I did purchase it earlier on the year for a little bit of growth. I did want to go with a little bit of the clothing sector, because I felt that the clothing sector was a little beat down, and things like designer brands, ANF, AEO, I think are going to make a decent comeback. So I allocated a fair amount to the clothing sector, to the apparel sector, and I guess I'll have to wait and see how that goes. I am currently up, as you can see, especially in the Gap, and of course in ANF, and a little bit of a laggard behind in DBI. But as you can see, I think the clothing sector this year, the apparel sector, will make a comeback. Certain stocks like American Eagle, Abercrombie and Finch, Gap. I think these are definite staples within a lot of American households, even though they are currently struggling primarily due to what's going on with online spending. But I think a lot of these competitors will kind of get their things together and make a bit of a switch so that they'll be able to push their earnings going forward. With that said, I did also buy a little bit of AMD, and so I kind of have like two of each of the chip sectors, and then of course EA for gaming, as I am a gamer. I think EA actually has been doing some good changes. I think for 2019 they were kind of like on the fence, really doing a lot of bad, and I think towards the end of the year they were kind of shaping up with things like with the new Star Wars game that came out, Fallen Order, as well as games like Apex that are doing fairly well. So I think EA is kind of getting their act together. Ironically, they've been pretty bad for quite some time, and so I decided to allocate a little bit of the risk portfolio into them. It's been doing fairly well. As you can see, I'm up 12.4%. The reason I went with both GEO and CXW, these are currently they are REITs, but they kind of invest in jails, and they were primarily beaten down because a lot of political nonsense, dealing with like refugees, people coming in. They currently, they do invest in jails and like holding facilities for like ICE for people basically coming illegally into the country. And of course, with the different banks are stating, oh, we're not going to be backing these type of companies anymore. And it's a very politically, in my opinion, politically driven sort of problem that's going on currently with the stocks. But if you've been following the news, they've actually been doing fairly well in terms of signing new contracts, etc. And as you can see, I'm up in GEO, I'm up 15%, and then CXW, I'm up almost 8.4%. And actually, looking at the charts for things like GEO, because they were doing fairly well up until about the middle of the year, when kind of everything kind of went south. And you had a lot of different politicians talking about, we were no longer going to be supporting these things. And this kind of happened also during the beginning of the Obama administration, right before he was elected. And then subsequently, as you can see, looking back at the stocks did rally fairly well. Let me go to the weekly. And you can take a look at it here on the weekly chart, where back during Obama's administration, excuse me, we'll go a little further back. You see that the stock did get kind of beaten down. Of course, this was way back in 2009 during the crash, and then again during the election years, and then subsequently the stocks did recover from about $10 all the way hitting just shy of I think about $30 here. So I think we're actually going to get kind of a little bit of a bounce here, looking at the chart, kind of bouncing off of the 2014 lows. And so that's why I kind of went along both of these stocks, because they both have similar charts, and they do work slightly different, but they are kind of in basically the same business. I also did invest actually, let's go back to the portfolio, looking back at the portfolio here. So like I said, CXW, GEO, EA for basically my one gaming stock, my chip makers, and then of course, like I said, for my risk, this is basically the 15% into my risk portfolio. I did go a little bit into tech, and then of course into apparels, as I think apparels will have a little bit of a comeback. In terms of the rest of my portfolio for my dividends, as I said, I did allocate 65% of this particular portfolio into dividends. And for my dividend stocks, I do like things like Iron Mountain, Ford, BP, Flow, Pfizer, excellent company, been paying dividends for a very long time. AT&T, another stock, been paying dividends for a very long time. ORI, banking stock, been paying dividends for a very long time. ENB, Ladder, I actually held Ladder for about a year and a half, and I did very well in Ladder. Unfortunately, sold it thinking I had reached the top, and the stock is still going. So you can see my portfolio here. I'm doing fairly well. I mean, where I'm down, I'm not down, but of course the market is rallying. Market is still continuing to rally, so I'm still seeing some fairly good numbers here, as basically the beginning of the year. But again, like I said, for this particular portfolio, my goal is to put at least $1,000 a month, and of course I still have my trading account that I do actively both day trade and swing trade. And of course, I will be continuing to post, weekly videos for that on different areas of the market where you can improve and how taking trades, etc. But in my opinion, I do recommend people who are looking to open up a dividend portfolio. Like I said before, one of the things that I find very attractive about the M1 Finance is between the auto investing. Of course, it is free. There is no fee for utilizing the service, as well as, of course, I knew that the minimum deposit is $100. You have to, the minimum that you can deposit is $100. And currently, I don't use the gold option, because the morning 10 o'clock purchase I think is fine, at least until I hit to the 10,000 mark, and that's just to take advantage of the extra gold that you end up getting. Well, you'll get like an extra 30% of your portfolio in terms of extra buying power. And of course, I would allocate that, accordingly. I would just basically spread that out into the account. So that's basically the goal for this particular portfolio. Is definitely a recommendation for 2020. If you're looking, even if you're only able to put in, the minimum of $100, even if you do $100 a month, you want to be in the habit of putting money away consistently, learning to live below your means, especially if you're looking to perhaps retire early. Even if you're young and in college and you're just coming out of college, learn to live below your means. Learn right away to save. This is something that a lot of people were not taught in school. Excuse me. And so it's definitely my recommendations. One of the better platforms that are out there for people who are looking to invest for both the short and the long term. That gives you a free service, and of course, there's a wide variety of different stocks that you can utilize for your portfolio. These are just the ones that I have chosen. If you are a bit younger than me, you might want to allocate a little bit less into bonds. Like I said, for my age, I am 40. I think 20% is a respective amount. And I did want to put in a little bit of risk into the stock, and it's doing quite well. As you can see, overall, I'm up 12.66%, and then the dividends are holding fairly steady. But of course, it is the vast majority of the where the money will be allocated to into dividends, and that's just to take advantage of the dividend capture, right? One thing also I enjoy about M1 Finance is that even when a stock pays dividends, right? So even though, like you see, I earned 11 cents here for this particular dividend that was paid by CXW, but when you end up auto reinvesting, it doesn't necessarily mean that those dividends are going to be reinvested into the same exact company, right? Because the way that it works is it allocates it according to the way that you've set up your portfolio. So for example, on my dividend portfolio, as you can see, I made some changes to like things like AT&T and Enbridge, because I felt that, looking at their charts and for the year, that they were a little overextended. I'm waiting for them to have a little bit of a pullback. So I'm currently deciding to put in money into different parts of my portfolio, waiting for these other stocks to kind of pull back and then change the allocation in terms of the percentages. As you can see here, you can see the percentages all the way on the right, how I've allocated it. And so I pay attention. I see what the stocks look like in terms of, do these stocks look like they're a little bit overextended? For example, taking a look at AT&T, as you can see, for the year, I do feel that the stock is a little bit overextended. We could see a little bit of a pullback to maybe 35, maybe a little bit lower, especially if the market has a little bit of a turnaround, and we end up getting a bear market for the next year or so. I'm waiting for these stocks that do seem a little bit expensive, in my opinion, and I'm waiting for a little bit of a pullback. Same thing with stocks, kind of like Pfizer. Things like Pfizer is doing fairly well, but I do think we're going to see a little bit of a pullback. As you can see, just looking at the chart, we're coming up right to that $40 mark, and I think the stock's going to back away. So I'm waiting for a little bit of a pullback. So I'm actively, even though I'm passively allocating the money in terms of allocating X amount of dollars every month. I do it every 2 weeks. But I'm also looking at the charts to see, does this look a little bit overpriced? Am I going to see, is this stock, coming to a resistance area? And maybe instead of making a purchase at the peak, I'm going to wait maybe the next couple of weeks and wait for a nice pullback, and then perhaps buy stock cheaper. But of course, if you're not really understanding how to read charts, then of course that might be something that you might not do, and you're perfectly okay with just basically allocating your money, basically week after week. But this is basically just a short video talking a little bit about M1 Finance. I am currently in it. I will be allocating more money, and I'll do one of these videos basically once a month, because this is basically just a separate account that I do trade a little bit on the lighter side, because I allocate the funds, they automatically go into the account. If you have any questions, feel free to leave it in the comment section. And of course, if you like the content, feel free to subscribe so that you don't miss out on future content. Thanks for watching. Take care. God bless.